The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. I wanted to mention, before we get started with the markets, a little bit about what's happened with the flash crash lawsuit that's going on. Folks, if you believe any of that stuff, you should buy some shares in the Brooklyn Bridge. They're blaming this on a guy who lives in an apartment right near Heathrow Airport. I happen to know someone who knows this fellow, and it's a little one-bedroom apartment where he lives. And the 75,000 contracts, I mean, that's not a lot in the S&P. The position limits on the S&P E-mini are 100,000, so he wasn't doing anything wrong with the number of contracts that he had. Now, he might have been, pulling orders. They do that stuff all the time. That's just part of the game. I just don't understand it. In fact, with MF Global taking as being the commission merchant on the side of it, there's a whole lot of things wrong with this. And why did it take 5 years for those bozos to figure it out? I'm going to be blacklisted for that. I mean, that's just doesn't make any sense to me, folks. Believe me. And you're talking about $40 million. Hello? I mean, give me a break. I mean, that's that's peanuts compared to what goes on in these markets. So let's get back to the markets. First of all, there is a big date coming up here on Monday, Tuesday. The window for this date starts today, the 23rd, extends out to the 29th, and the reason for that is there's so many of them coming together one day after another. Any one of them could make a top if this is in fact going to be a major top. But the chart that I wanted to start with today is, if you believe in pattern recognition, you like ratios and patterns, we're going to take a trip to London, because if you could take a look at the FTSE index, which is the UK stock market, you can see it forming a beautiful butterfly pattern. You can see it forming an absolute perfect three drive to a top pattern. This is a long term. This goes back over a year or two. So this is a very interesting pattern to be watching. So we want to keep that in mind. We want to watch the days coming in, because we have some time to look at this over these next few days, and we will be watching it without any trouble at all. One of the things that I've been looking at for quite some time, as most of you know, is the New York Stock Exchange Index. And, we're up near new highs again in this. We're not very far away, and we expect that to happen. We did have an island reversal as of Friday, but coming into Monday, that negated it, because we immediately took off, and we're up Monday, Tuesday. We're up Monday, Tuesday, Wednesday, Thursday. We'll probably be up Friday in an up week, and that brings us right into Tuesday, Monday or Tuesday, and that's what will be interesting to see, what this is going to look like when we're finally ready to see if this is going to be a turn down. Now, one of the things that happens to you when you're trading, and just about everything else in life, and trading is probably a good analogy of life as anything, is that all of your frustrations in life and trading, your child, your job, whatever it happens to be, comes from expectations that are not fulfilled. And you don't want to be tied up to my analysis of what I think is going to happen, because I am wrong a lot. I'm also right occasionally. But, if we are right, next week is going to be a down week, and it's going to be a bad down week. Now, if it's not a bad down week, then I'm probably wrong, and it's probably going to go a lot higher. But right now, it's doing exactly what it's supposed to be doing. I mean, it just can't act any better, than what we've had. Just today, just looking at the S&P today, folks. I mean, last night, we had a little bit of a pullback last night, and right down to a 61% retracement, screaming that this probably wanted to go a little bit higher. And what have we done? We've almost completed the ABCD of this move that comes in around the 210 level. So this is going to be a and we're already into new high ground, so we've already fulfilled one of the expectations of what we had, and that is we would make a new high into this week and probably as late as Monday or Tuesday. So nothing really exciting is happening any different in this market. So everything's lining up. I just don't know if it's going to work or not, but it's certainly got all the things necessary, to tell you that this is what you want to be looking at. Now, there is one of the markets that is going is at a real critical level also, is one that we like to watch, and I'm not sure it's going to hold up, but this crude oil market, excuse me, let's get back to silver for a second. I want to cover silver and gold first because this is the commodity hour, and these are the ones that I like to watch the most in the metals are silver and gold. And I'll put up the daily silver, and as you can see, the 61% retracement held for just one day, and that suggested we were coming down to the 786, and that's what we hit yesterday. And again today, we're trading basically 6 cents above the 786, which is really not very much. And whether silver is going to continue down or not, I'm not sure. There's still a chance that silver could go down and test that $14 an ounce level, one more time. There's certainly that possibility with it. But right now, it's got a little bit of a chance to hold that level. That's about, that's really all you can say about it. It's slim, but it's so far, it is holding. That's the whole thing. The Treasury bonds, we'll put that up here and take a look at that because we're at a really near really nice buying point in the Treasury bonds. This market has had a heck of a run here, and we're having our first major ABCD here in Treasury bonds. Down near the 61 level, right around, 60.28, 60.30 was a low yesterday, 61.03 was a low today. So we're looking somewhere around that 60 area is where we would be completing this ABCD level in the 4-hour Treasury bond chart, which goes back for, well over 6 weeks. And that's at a 50% retracement of the whole move. So, the bonds have been, relatively bullish. And if we do get something happen crazy in the stock market, like maybe a sell-off, maybe even a down day, who knows? There could be that minimum flight to quality that people talk about, and that makes it, quite interesting also. If we take a look at the Treasury notes, we see a different pattern in the Treasury notes. And the reason for that is that the notes are not making this ABCD pattern that we're seeing in the Treasury bonds. Now, that is a very unusual situation because the correlation on these two instruments between the notes and the bonds is about 95%. So this is a very unusual situation where we have lower lows coming in on bonds and yet notes are higher. That tells you that there is a potential for a flight to quality here. And it's interesting whether this is going to continue this way. But right now, this divergence to me means a lot. And if you remember, back in January, we had the same type of divergence, only it was the opposite way. The notes were were weaker than the bonds, and that told us that we were getting ready to have a pretty good correction, and we did. From January 26th into March the 11th, we had that big sell-off that took the interest rates up for quite a bit. But that was a short-term phenomenon, and we're going to have to wait to see what's going to happen over these next few days. I wanted to mention just a little bit about what my approach to what's been happening here. As most of you know, I've been working, we're making a new high in the New York, oh boy, this is beautiful. We're making a new high in the New York Stock Exchange Index. Boy, you can't ask for anything better than that. Wow, that's great. Boy, that's really great. Oh boy. Anyway, what I'd like to talk to you about is this cycle that we see happening. When I did the book with Shane Smolian from Miami, a nice young fellow that I met, I needed someone that was really good with computers and knew a little bit about astrology. And I frankly got really, really lucky because he happened to be not only an expert astrologer, but he was extremely good with computers, and he had a background in physics and mathematics. In fact, he teaches physics in Florida. So what's what was interesting is that we approached the book, had some ideas on what would work and what might work, but we had Alfie Lavoie's software, Air Software, which was his titanium program that gives you all the aspects and just about anything you want to do astrologically, and gives you 100 years of data to test it. And so what he did was he statistically validated some of these cycles that we're looking at, and what he's coming up with is from today, the 23rd, up through the 28th. There's a whole series of cycles that are cresting at the same time. And what he means by cresting is that the probabilities go from positive to negative. In other words, you have a 65% chance of the market going higher into these aspects, and then after they occur, they start to turn down and they give you negative aspects. These are related to the retrograde motion of some of the planets that Norm Winsky talked about when he was on the show on Monday, I believe, and so we'll be watching this with a great deal of interest. My good friend Bill Ehrman, who's probably we'll have to say he is the best at long-term timing that I've ever found. He uses a combination of sacred geometry and and sacred geometry and mathematics to come up with the numbers that he looks at. And Bill was spot on when he was looking at the low way back on March the 5th of 2009. His work, I follow it. I mean, he's not in the public eye very much, but I follow it very, very closely. But when this man tells you on a scale of 1 to 10, it's a 13, you better pay attention, because I have watched him, and the highest number he's ever given me was a 9, I believe, and that was in March of 2009. So let's pay attention here. Now, if we're wrong, this market's going to continue to go up next week, and it won't make any difference. But if we're right, we're going to get very, very close to one of these times where it could turn, and you might want to think about buying a May or June put. I would prefer the June put, because that gives you 2 months, for it to work. Buy it like 1 or 2 strikes out, and because the market's going up, the puts are not going to be nearly as expensive. So that's something that you might want to keep in mind to protect your portfolio if this is going to happen. Now, like I mentioned, you don't want to get too tied up in the expectations of what I'm looking at and what I'm watching other people look at, is because that can certainly not work, and you want to be very, very careful of that. So that's just my 2 cents worth with the cycles of where we are. But it's very important. That's all I can say. It's just a very, very important cycle, and I think it's just very, very important. We have to watch it. And not only that, but the patterns lining up beautiful. We got to take a little break here. We got the Dow Jones up about 50, and the rest of the market up along with it.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direxion Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direxion Shares gives you the tools for both sides of the trade. Discover how we can help at DirexionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion Shares. To obtain a prospectus or summary prospectus, please contact Direxion Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, we're going to switch gears here and get into the crude oil market here. We've had a $3 rally, $2.50 rally in the last couple of days in crude. We've come up to that $58 level. They're talking about it on CNBC as the start of the big bull market back in crude oil. But if we look at this really closely, you can see we have that 135 pattern that Roy Longstreet made so popular. Basically you're looking at two lower highs, and unless crude oil can close above 58.50, this should be a pretty good place to see a reaction in crude oil. Whether this is going to happen or not, I don't know, but it's based on probabilities. But that's what the pattern is looking at that way in crude oil right now. The bottom that we had, of course, in the crude oil market was not too much of a mystery. We had, a lot of things going on that made the market look like it certainly wanted to work to the upside. We had, gasoline had made the 786 retracement on the weekly chart. And, heating oil was also stronger, and that's what's caused the market to go higher. And that's the same thing that we have going on, right now in the markets, is that same phenomenon of the heating oil and gasoline are leading crude oil, to the upside. So it does look like we've had a 25% rally off the bottom now. In oil, there should be some resistance up around that 60 to 62 level, but we'll wait and see how the market handles it, because we've been rallying now for well over 4 weeks, and that's usually all you're going to get in a really bear market, and this has been a bear market in the crude oil. So we'll watch that with a great deal of anticipation. One of the questions that we've had this morning is about the XAU and also the HUI. I think we'll do the XAU because that's the easier one to really understand. That bull bear one, that HUI, is a little more difficult to look at. But we'll take a look here at this XAU. And as you can see, we've had a nice little 5-day correction here, and we haven't really done very much right now. It's still up with the rest of the market, but we really need this to get above the 73 level for it to move, and that means we'd have to get gold above 1210. That would be the kickoff price for gold. But so far, gold is held very close to that number. We were looking at potential to get to 1170. We got to 1182 today per ounce, but that's still a little ways from where we think where I think we could go. So we want to watch that with a little bit of anticipation for sure. Now, we were going to, when we get to the break here, I want to talk about the grains, and also we'll talk a little bit about the cattle market. I was going to have Rich Anderson on today, but unfortunately he was busy. We'll have him on next week for sure. And on Monday, we're going to have a special guest. We're going to have Bill Meridian from Vienna, Austria, is going to be our guest. He happens to be in New York City for some meetings. He's giving a couple of speeches there. So he's agreed to come on our show at the half hour on Monday. So you don't want to miss that. He's a really sharp guy. And boy, he really knows astrology. He was one of the people that helped Alfie Lavoie build the titanium program that Air Software, sells for astrocycle stuff related to the markets, because it gives you all the probabilities of the things that we're looking at. So we're going to keep that certainly in mind. Now we have. The question on the XAU, I hope I answered it. I guess I haven't. Basically, the XAU has had a 5-day correction here, very, very minor, which is a good thing after we made the Gartley pattern. It didn't back off very much, but if it's any good, it's got to move higher than it was 5 days ago. That would be above 73 in the XAU index. If that happens, that would tell us that we're going to go probably substantially higher in the XAU, which are the gold and silver stocks, and that would be the same thing that is happening in the gold and silver. They would turn also, but right now, that's not happening. We got silver just setting down here at $15.81 an ounce, and gold setting here, at $11.90, and they really got to get moving. I mean, they're at major support, but they have to start going up. And they're not doing that right now. So you have to wait to see this market move from this level. I mean, this is the area where the support should be in both gold and silver, but that doesn't mean, that it's going to stay that way. You just don't know. Well, you never know for sure. The only thing you can do is protect yourself. We'll be right after we pay a few bills here. 877-927-6648.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're going to take a look at wheat now. I've posted the chart of July wheat, and you'll notice that we have those big ABCD patterns going up into the 786 level that we had up around the 680 level, where we had the big shooting star candle. We were actually talking about that, and we were watching the the market make that thing and certainly make that pattern, which is the most bearish of all the candlestick patterns. The most bullish of that, of course, is the other side of it. The opposite of the shooting star, of course, is the hammer, where they hammer out a bottom, and the shooting star, ends the market on the upside. But where we are with wheat now is that we made a potential triple bottom down here, and we're going to see if this is going to hold. We're coming into a really key time of the year. We're planting corn right now, and beans are also starting soon as the ground thaws in most of those places, which it should be now. They're starting to plant corn and beans, and we've never had a crop year where we haven't had at least one or two scares. Now, we had a huge crop last year, the biggest ever, so we do have large supplies, but if we do have any type of a problem with this high pressure weather center that can happen over the north central United States. That brings in a drought. So we've had a tremendous drought in California. They say it's the worst in history, certainly over the last 100 years or so. And we'll see whether this will move into the other parts of the country or not. I don't know, but it's really bad in California. They don't allow people to water their lawns or wash their cars in the little town where my daughter practices, and it's really a sad situation because it's a beautiful area, but it's basically turning brown, and that's not a good thing. However, we want to take a look now. We finished the wheat. Now we want to go to take a look at the corn market, because corn is acting a little more bullish than the wheat, because we've had some targets that have not been able to be reached, which the market, given the fact that we have all these supplies, we've held that 380 level for quite a while, 370 to 380 for quite a while in corn. And it looks like if we can't get down another 35 or 40 cents, this pattern could break out to the upside. So these are, we're getting ready to see the weather start to move, but Rich Anderson is helping me follow the weather pattern. He has access through a couple of the super traders that he trades through. They have their own weather service, and they are watching this weather report, very, very closely. Years ago, we used to watch the anchovy crop coming out of Argentina, because that would affect, soybean meal, because anchovies are all protein just like meal is, but they couldn't feed anchovies to chicken because chicken begins to taste like fish, and so they had to change it around quite a bit. Now with the Brazilian crop about the same size as our soybean crop, it's not the same thing. And since we're starting to talk about soybeans, we'll bring that up. We'll take a look at the November beans, and it's also in the situation that we're having with corn. We're not getting the sell-off that we thought we were going to get. So we're starting to see some signs of the market having some demand coming in at a time when it usually doesn't have really good demand during the planting situation. So we'll be watching it closely. Now the thing, if the market does take off and starts to move up past last week's high, that will tell us that we're getting ready for a move. So we'll be watching for a place to potentially buy the wheat and the corn and the beans to see if they can come together at the same time to start a move up. But we've never had a year that I can ever remember, and I've been doing this for 55 years, where we haven't had at least one scare. And when I started trading, back when corn was $1.30 a bushel, the trading range on the week would be 3 cents. Well, it trades 3 cents in about a half an hour now. So the volatility is a lot greater. And of course, prices are 3 times what they were. But it's still, we've got a lot of people in the markets, watching these things for the potential of of a drought, in fact, if it does happen. Now, one of the markets that Rich helps us out with, and he's been really spectacularly right about, has been the live cattle market. And we've had some with the problems that they're having now with the corn market. Let's try about it. The pork market. Let's try it again, Larry. Because of the chickens having trouble with this bird flu, the price of some of these other things have actually held up pretty well. Now, we're approaching the 61% retracement in cattle from the bearish Gartley pattern that we got a month ago when we were trading up around 54. We came all the way down to 46. We dropped 9 cents. We've made a beautiful Gartley pattern here to the downside, stopping right at the exact 61% retracement. So we want to be, if you're in the cattle market, now is the time you want to be looking to cover your short position and, go long cattle. We've had a bad week starting out with Monday and Tuesday, but right now, well, we're holding up really well. But we do have that big gap down that we had on Tuesday. That was, I believe, a cattle on feed report. But we should be getting ready to have a rally here in the cattle market. Now, I don't understand a lot about chickens and stuff. When I was trading at Conti Commodity way back when Moses and I were in school together, there was a place called Goldman's Egg City. And the broker for that was Rick Barnes, who became one of the market wizards, bid $1 million Barnes, and Rick was the broker. He actually made enough money off the brokerage fees from trading eggs that he was able to go to Chicago and get his seat and made history, and now he's worth several $100 million with his own clearing firm. But you know, he was the last I remember about the egg markets. But they have to kill 4 million chickens, and believe me, that's not a small feat, because they have to be I forget what the word is. It's something about the environmentally safe to destroy them. So they have to incinerate them, and then they have to bury the ashes or whatever it happens to be. But it's a real expensive process, you know, getting rid of chickens. So don't go into the chicken business, folks. It's just not worth the effort. It certainly is not. Oh, we have so we have a question here. It's not from Priceline Charlie, but we'll bring Priceline up and take a quick look at it here, because we do have a request to look at it, because we're still in a bearish mode in Priceline. We're approaching the 786 level right now, but it looks like we have a little bit more to go with the rest of the market coming into what I think is this pretty significant crest that we have forming. But right now, Priceline should have some resistance up here around the 1230 area. Our original area was 1220 to 1230, so we're right in the middle of that right now for a potential sale. We've had lower highs here, you know, ever since last February. So, you know, keep in mind that this still is a bear market in Priceline. But if we do get above 1270, all bets are off. We could go a whole lot higher in Priceline if we get above 1270. But that's a long way to go from where we are right now. We'll not talk just a second about Dow theory, because it's going to come into effect with what we're looking at with the rest of the markets, and I still believe that Dow theory means a lot. And you'll notice that we're making a bearish Gartley now in the Dow Jones Transportation. Over the last 2 weeks, we're coming right up to the 618 at the same time that we're looking at these cycles coming together. Sometime between now and Tuesday would be what we're looking at for a potential for the top. The best way to trade that probably would be to look to to buy an out of the money put, and that would be the thing that I think would probably be the safest for most people, because that protects you to the amount that you're paying for the put. However, remember that when you trade puts and calls, 85% of the people that buy and sell calls lose money. So that's those are bad statistics against you, but the time that you're right, it really pays for it. Back in 1987, during August, I was buying October puts, and they were way out of the money. They were more than 10% out of the money. I didn't pay very much for them, and they made a great deal of money on October the 19th. The problem was there was nobody to take the other side of the trade. You couldn't even cover your positions. It was that bad. I wasn't able to cover my positions until the 20th, when the market started to trade semi-normally. It never really traded normally till Thursday or Friday of that week, and the market was 30% higher than where I wanted to get out at. I mean, I still did really well, but those were times that you don't want to go through. Those are really, really bad times that you just don't want to run into stuff like that. There's no way, no rhyme or reason that you want to have that happen. That's something you just don't want to go through. So we're making new highs here in the S&P, which is ideally what we'd want to see. And in fact, we've got above that 2110 level, which was our projected ABCD of that move that we saw this morning. So we'll keep an eye on what happens to these for the rest of the day. But we're right in the zone. It might not work, but this is Mother God and country, folks. The Mother God and country stuff, because this is everything you could ask for if you do pattern recognitions and cycles. It's all coming together, just like apple pie. Hopefully the oven will be ready, and we'll see what happens. The good part is it's not going to be too much to risk, because of the fact that it'll either work right away, and I'm talking by the latest Thursday of next week. That would be the latest that I would think anything would happen, but we'll see if this is in fact going to be the case. So it's very exciting. I've been waiting for this for a very, very long time, and I'm just really happy to see everything come out together the same way, which is really nice. They don't do it this often, but it certainly makes it fine. Now I want to bring together here just a second here. I want to show you the New York Stock Exchange Index one more time, putting the numbers in. Oh dear, here we go. Just give me 1 second here, and I can get this put in here. I wanted to show you the time counts and stuff that one of my colleagues is looking at cycle highs. And if you'll notice that we're right into this zone right now, we've got a little bit more to go to the New York Stock Exchange Index, about another 2 or 3%, which figures into the same thing on the Dow and also on the NASDAQ. All of them will be coming together pretty much at that same time. So this is really going to be very interesting here to take a look at it. So that's basically what I'm watching here for these for the stocks. I mean, it's just got everything going. Oh, the VIX index. We need to do the VIX because we've been expecting the VIX to break down one more time, and we are certainly going to be doing that, I believe. I haven't checked it today. My alert hasn't gone off yet, so I know it hasn't hit the price that I was actually waiting to see, which was 11.5, I believe. Nope, hasn't got there, but it's very close. We're waiting for it to get down one more time here. We'll put it here and we'll be able to see it. Now, you'll notice that the other day when we had that, this was about 5 days ago, we had the big sell-off in stocks, and we had that shooting star candle, just like we had in the wheat. You can see that tells us that we still want to go a little bit lower. 1150 is the area that I'm looking at in the VIX. We've made new lows now over the past 7 or 8 months. And a little bit lower coming in Tuesday, that would be the thing that I would be watching, very, very closely for the market to make its turn here, if in fact it's going. Boy, it's just set up so beautifully, folks. I mean, the VIX index, the New York Stock Exchange, the S&P, the NASDAQ, the Dow Jones, the divergence in the transportations, the divergence in the Dow Jones utilities, and the fact that Treasury bonds have sold off dramatically, completing a big ABCD. Gee, it just looks too good. And that brings us to the other point: is when things look too good to be true, maybe they are too good to be true. So we'll just be careful here. You don't have to risk an arm and a leg. That's the best part of it. You've got smart people here like Steve Rhodes and Daryl and Basil Chapman and Tom O'Brien, to lead you along the way. So if I'm wrong here, that's not going to be anything new, but I'm certainly not going to wait around a long time to see if I'm going to be right or not. But I've been expecting this market to make new highs in here, and I believe that we've got a chance to see something really dramatic coming in at the beginning of this week coming up. It will be very, very exciting to watch, no matter what. It will be history making. I don't think there will be any question about that. So we're going to take a little break here. We'll come back. We'll finish up the show. 877-927-6648.
If you're like me, you see the world's emerging nations as a very real opportunity. as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe future economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Up next, the Diagnostics Trading Hour with Daryl Martin. Here on TFNN. Now, back to the Futures Hour.
Wow. Okay, we're back, folks, and we're going to take a look now at gasoline futures. We've had a request from Danny in Atlanta, and basically what we're looking at here is back in January, they had made a lower lows in gasoline, quite a bit. We've rallied 30% in gasoline prices here in the past, 40%. In the past 4 months. And if you'll notice here, we had an ABCD pattern form. We had a slight 5-day correction that just took us to a 382 retracement of the C leg. And now we're breaking out above the highs of last February, and that's what's putting pressure to the upside on crude oil above 58. So this is going to be interesting to see what's happening, because we have the divergence now between crude oil not making new highs and gasoline and heating oil. Both of those, are making new highs. So that's the key thing to be watching. So that's the other chart that I posted into Tiger TV during the break was the chart of the euro versus the U.S. dollar. And as you can see, we've had some higher bottoms forming in here recently, which makes it really biased to the upside. We've had higher bottoms actually for the last 10 days, and that sets up a price objective for a bearish Gartley to form up around that 109.50 level. And remember, this market still has a long-term price objective of at least 99 to 97 on the long-term weekly. All we're having now is, correcting a tremendously oversold market that was down almost to 9 months without any correction, and now we're correcting that particular thing. But just long-term, you can see the euro has a lot of room to go to the downside, and can easily rally up to where it broke down from, which is up around that 112 to 114 level. That's a $4,000 move in the euro, and you don't want to be short during that time, even if you're looking, at much lower prices. So right now we're just in the midst of another rally, which has been going on for quite some time. It's been telling us that it wanted to, go higher because it was having higher bottoms, all along the time that, it was supposedly being bearish, much like what crude oil did. As crude oil was making, higher bottoms, everybody was telling us that it's going to $30. Well, that's not what always happens, because the market's going to do what it wants to do, not what everybody thinks it should do. That's the key thing. And that's you should only listen to yourself, folks. And the reason for that is because you're the only one that takes the responsibility. My opinion doesn't mean very much. Matt Basil and Steve and these guys' opinion means a whole lot more than mine, because mine is biased because of what I'm looking at. And I frankly, watching stocks, and this is what it appears to what's happening. I've been expecting this, and when it happens the way you want it to, it literally scares you sometime. And I've been long this market for quite some time. I got out of it yesterday because of the fact that we were close to that 23rd date, which is the start of this, which is today. And the last thing I wanted to do was to be long and something dramatic happen and I get hammered. I would rather take a loss or miss the opportunity of the thing than than be on the wrong side of the market. That's just the way I'm looking at it. So we'll be ready. We'll see what happens here. We got the rest of the day, all day Friday, and we've got then Monday and Tuesday, which is the FOMC meeting day, which will be a very interesting thing to go on. But, the chances of them raising rates, they say, is very, 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 very slim. But be careful, folks. Be very, very careful. Remember Mr. Greenspan back in 1996? Raised rates in the middle of the day. Live every day in an attitude of gratitude, my friends, and may God bless.
Basil Chapman has just announced 2 live workshops that he'll be hosting April 27th and May 5th that only subscribers to his opening call will gain access to. On April 27th, Basil will host a 45-minute live online workshop, The Essentials of the Chapman Wave, where he'll teach the basics of the Chapman Wave notation that Basil created and uses daily in his trading and newsletter recommendations. On May 5th, Basil will host a second 45-minute workshop where this time he'll revisit the 1929 market market comparison webinar and provide his attendees with an updated take on the socio-economic trends Basil has spotted currently taking place. If you're an opening call subscriber already, then your seat is already reserved. If not, then sign up for a 30-day free trial to the opening call today. You get a month of Basil's daily newsletter, The Opening Call, along with 2 live workshops coming up. Don't miss out on this offer. Sign up for Basil Chapman's Opening Call newsletter today on the front page of TFNN.com.
You're watching Tiger TV.